Hi guys, welcome back to my YouTube channel. I'm so excited about the video that we'll shoot today. I have a special treat for you guys. We'll be talking about financing and everything you need to know about financing. And I have here to help me with this discussion, Kelly, and we're gonna dispel all the misconceptions and myth when it comes to financing, and then also everything you need to know every step of the way.
I'm super excited to be here today. Thank you so much for asking me.
Oh yeah, I had to because when we work together, it's a dynamic duo. Like it's perfect.
It does. It just goes like ebbs and flows so much, and I think it's the perfect balance for our clients as well to know that they have a great team behind them.
Yes, that's true. So let's get into it. So here we have Kelly. She is a phenomenal mom of 3, but an extraordinary mortgage broker, right?
Awesome. Yeah, I would like to say so. I've been in the business for almost 20 years now, and I've seen a lot of different markets. I've been through a lot, and it's given me a lot better perspective for my clients, going through these different markets. So
yeah, I can agree. Like every time I introduce you to a client, it's like your commitment to them is just unwavering. So I'm excited to have you here so you can share your knowledge and then some of the stories or whatever you want to share with the audience just to make sure they have a easy process when it's getting financing. Because I was reading the article and the article pretty much stated like a lot of times first time home buyers, they tend to have a bad they have a bad experience when it comes to buying a house, and it's mostly due to the mortgage part of things and not necessarily the agent. So I guess what are some of the myths you can think of when it comes to getting pre-approved for a loan?
yeah, we can dig into that. And something that you just said right there is like they have a bad experience. And I think that's so important to talk about as well. And like why you partner with obviously the right people and why you've partnered with me, and to make sure that you have the right team behind you and people that actually care. And one thing I do with my 20 years of experience almost, and being a mom of 3 and having a family, is I really take these clients in as part of my family almost. And I hold their hand, and it's all about communication. It's all about giving them what they need to make it to the closing line and giving them the knowledge, because knowledge is really power, right? Yes. And a lot of these people we talk to could potentially be the first time anyone in their family has purchased too. And when you think about that, it's amazing to get them to that step, but also how scary for them to walk this road alone as well. Right. So I think maybe a few common myths, obviously the number one that we still talk about this day is you don't need 20% down to purchase a house. Exactly. Right? You don't need to save away for years to get to that finish line, but you do need a little bit of money.
And I did not know that until I became a real estate agent.
Yeah.
So tell us, so what are some of the type of loans, and then what's included with the down payment or things like that?
And I think it varies from person to person, but just kind of speaking in a generalized manner, FHA is 3% down minimum, a great first-time home buyer option right there. Conventional, you do have the option as a first-time home buyer to do a 3% down payment. Some people need to do a 5% down payment, though, for conventional. VA, if we have veterans that are interested, an amazing loan program, 100% financing. USDA, which I just read a statistic the other day about how many loans would actually qualify for USDA, which it's an unbelievable amount, 100% financing as well.
Really?
Yes. So there are options for our clients that don't have the 20% down. And I think something to also talk about with the clients is everyone is scared of PMI. It's kind of like a dirty word for some reason. Right. But when you look at the amount of money that PMI actually is, it makes more sense to save that other money in the bank, save it for potentially things that come up with the house and put that a large amount of money down if you don't have it saved. So
yeah, so a lot of people save. A lot of people do save so they can have that 20% down so they don't have to pay PMI. Yeah. But sometimes it can they can miss a deal, right?
I think it could be a negative. I mean, if you have excellent credit, 780, and your PMI is only $28, $29. Like, why are you fretting about $28, $29 now on a month? On an FHA loan, on a $200,000 loan with a 3.5% down payment, PMI is only $86. And that allows you to get into a house with only a 3.5% down payment. Mm-hmm. That's amazing.
And what's the lowest? Because a lot of people don't know this for a conventional loan. For
conventional in terms of the down payment,
yes.
3% down.
3% down.
Yep.
A lot of people think for conventional that you have to have 20%.
Yep.
So what do you tell someone that's searching for a house? It's a lot of times I often hear buyers say, well, they want to get into a house, but they want to use someone else's money. What would you tell a buyer like that?
They want to use someone else's money, like in terms of...
They don't want to pay anything.
They don't want to pay anything. Well, that's hard. I would say, let's look at your options. It's definitely best to have a smaller amount saved for a down payment. But for a handful of buyers, there are grants out there. Mm-hmm. There is first-time home buyer assistance. And you just have to look at the pros of that and the negatives. And that's something that I walk through all my clients with. And a lot of that is interest rate based. So a few years ago, a first-time homebuyer grant was a great idea. But right now, when you just look at the difference of what you may be paying in interest rate for that grant, then maybe it doesn't make sense. So just look at all of your options.
That's true. Okay, let's talk about the buyer that I often get buyers, and I reach out to buyers all the time, and they say, well, I'm just going to wait until I'm in a better situation. And that better situation to that buyer could be maybe to increase their credit score, to save up more money. What would be your advice to a buyer that is waiting to get pre-approved?
I would say, let's first figure out what that perfect scenario is for them, and let's dig in a little bit more. I think a lot of first-time home buyers especially don't know what they don't know. Mm-hmm. And we talk about that a lot. So I think that sometimes they're just scared to make the phone call. Yeah. They're really scared of hearing no. And I can totally understand that. This is a huge step. And if you think about it, if you're trying to purchase for your family and you're just so wary about it, then it could potentially scare you from making that call and maybe perhaps say, I don't want to do this yet because I need to work on X, Y, and Z. Mm-hmm. So first of all, I always say to my clients, it's okay if we can't get approved right now because I'm going to walk you through the finish line if it's 30 days from now, 90 days from now, or next year. Second of all, I say, let's just take a look at it because what you may be doing to put yourself in the best financial situation could potentially not be the best thing for your mortgage best fit, if that makes sense. So,
yeah, that makes sense. So can you give an example of that? I know oftentimes when I see new clients, I kind of set that stage up to have those tough
you
conversations,
do a great job.
Right? Because sometimes, a lot of times, people are hesitant to actually reach out to a professional and get consulted on getting pre-approved because they're probably scared of rejection, right? So first thing first is always consult with a professional, right?
Yes, always.
Because doing things on your own, it can prolong the process, but it can also have a negative effect, right? If I'm understanding?
I would say so. Let's take into, for example, someone who thinks that they have to pay off all their debt and maybe have these accounts closed. Well, did you know that if you close an account that's been open for, let's say, X amount of years, that can actually make your score drop if it turns into a closed account? Or maybe you don't have to pay off these credit cards, and maybe it would be better for this money that you've been using to pay off debt to sit in the bank and to be used for a down payment. Maybe you're trying to save for a higher down payment, but then you're missing the boat on a particular house or particular interest rate because you're so focused on your perfect scenario. Right. So that's why talking to the expert is key.
I agree.
Especially when shopping for a mortgage.
Yeah, that's true. So I think this is under, a lot of people don't talk about this. This is a topic that's really not spoken of, but also what I discovered, which is really important when I'm having these conversations with lenders like yourself or brokers like yourself is that the debt to income ratio. How important is the debt to income ratio? And a lot of first time home buyers or buyers in general don't understand or get that concept. Can you explain that a little bit to us?
Yes. So debt to income, if we're looking at, things mortgage lenders take a look at, most of the time it's, your credit score, your debt to income, assets that you have in the bank, and the type of property that you're going to be purchasing, whether it be primary investment or secondary home. But debt to income is very important. It probably weighs in your file about, 35 to 40% of the factor of getting a loan approval. Mm-hmm. So your debt to income is what your income is before they take out any money for taxes. We divide it by 12 for 12 months in the year. And then we take all your debt that shows up on your credit report and your new housing payment.
Okay.
And then we divide that by your income. And that's how you get your debt to income.
Yeah.
We don't count in any like electric, cable, anything like that. We always ask you if you're going to open up any new debt or if there's anything potentially that you pay on a monthly basis that may not be showing on the credit report, just to make sure we're getting the most accurate view of it.
Right. So pretty much you take what's being reported to the credit bureau and you take that's part of your expenses.
Exactly.
And you consider what the monthly payment will be on the house to see what someone can afford. And then you times that by 12, right?
No. So you take that, you add it all up, and then you divide it by the monthly income.
You divide it. Okay.
Yep, you divide it.
I get stuck with that one. That's why I always say, go together.
Yes. And, you know, different loan programs have different qualifications for debt to income as well. So based upon different factors, like if you have a lot of money in the bank, you could potentially have a higher debt to income and we won't have issues with loan approval. But that's a great question.
Oh, thank you. Okay, so that's really informative.
Yeah, and I think also piggybacking off of that, one of our other myths we wanted to kind of chat about is self-employed clients. They're always so nervous to get loans. There are options for self-employed clients.
What are the options?
Yes. So debt to income is always an issue with our self-employed clients because as someone who is self-employed, you do get to write a lot of your income off.
Right.
So if you don't qualify right away, that's okay. As a broker, we have the option to look at all these different loan options. We can do a bank statement loan. We can do potentially a 1099 loan. There's just different options that we can dive into. So going back to debt to income, I think, and what we just talked about, it's always good to consult your mortgage broker and a banker that has access to all these different programs so they can make sure that they're, you know, fitting you with the best mortgage.
Exactly. Okay, so now let's dig into the meat of things. So let's talk about the buyer. They come to you to get pre-approved, right?
Yes.
What's next? They got the pre-approved. wait, before we even get to that point, we have to talk about when you're vetting a buyer, what are some of the documentations that you ask for that you need in order to actually issue the pre-approval?
Okay, so for myself, I always get all the supporting documents up front because I want to make sure that what we're talking about over the phone actually correlates to what's on their documents. So we always want to look at paycheck stubs, W-2s, bank statements, maybe potentially tax returns, financial statements. It just really depends on the borrower and how they get paid on a monthly basis and what we're trying to use for income.
Okay, sweet. And so I haven't experienced it because I'm fairly newer agent. You've been in the industry a long time. So from my understanding, back in the day, you didn't even have to have a pre-approval to shop for a house. You go shop for houses, but now in this market, it's so competitive. And I think a lot of buyers need to be aware of something as such, like documentations, collecting the documentations, getting the verification that it's actually a pre-approval. Can you explain the difference between what's a pre-approval and a pre-qualification letter?
Well, we don't do pre-qualifications. I've never done one, but I would say that the difference is, hey, a pre-qual is I talk to you, I potentially check your credit, and I say it looks from the outside good. Everything looks good on the outside, but I don't know what it looks like on the inside. So then I guess you'd send over a pre-qual if you don't want to, if the banker doesn't supply, you know, have the client supply the documents. But a pre-approval means everything's been checked.
It's been checked. And when it's checked, it's verified. And it's how through underwriting, right?
Well, like the underwriting system.
Underwriting system, okay. So, okay, another thing is, let me think of this. Let me think of how to word it. Okay, so like peer approvals aren't always guaranteed, right?
Well, no, you need to make sure, especially in this interest rate environment, that you're working with a qualified specialist that's following up with the client, especially with interest rate ranges, right? So if you have a client that was pre-approved 4 months ago, that interest rate may not be the same today. The money that's in their bank may not be the same today.
Right.
So you need to make sure, and that broker needs to make sure, and what I do personally is I follow up, you know, every week if they're shopping hard. You know, if they're kind of just sitting on the outside, we don't like to overcall them, but like every other week, every 3 weeks to make sure that the pre-approval is still good.
So it sounds like it pretty much sometimes are conditions that need to be met in order for the pre-approval to actually be granted. Would you say that's fair?
I would say that's fair. So I think maybe what you're asking as well is like kind of what happens after the pre-approval, about maybe that process afterwards, maybe when you're in process, the loan conditions or?
Not necessarily, because I've experienced working with a couple buyers. They'll be like, oh, they'll get the pre-approval and they don't understand that they need to still work 40 hours.
Oh,
they
yes.
need to still,
Okay.
show up. And,
Yeah, the do's and don'ts after the pre-approval process. Yes, I just did a video on this.
So what are the do's and don'ts?
So I would say the do's are make sure you get all your documents to your mortgage broker as soon as possible. Make sure you're communicating with your banker if anything changes in your situation. Make sure that you're not...
what are some of the changes before you keep
Well, let's say you change your job. Let's say you're depositing large sums of money into the bank account, because they kind of go right along with the don'ts. Like the don'ts would be, don't open up any new credit.
Right.
If
Don't do
don't
that.
do it. No. And if you have to...
Don't go shop for that new furniture. Wait until you close on the house.
Exactly. And if there's like a life change, like just communicate it.
Right.
Communication's key.
Right.
Don't make any job changes.
Exactly.
And if for some reason you get laid off or you get fired, you have to reach out and let somebody know so we can try to come in and find a resolution to it.
That's fair.
Don't deposit any large sums of money into your bank account. A lot of people don't know this or don't even understand the why behind it.
What's the amount? Is there a certain amount, or
it's technically 50% of your monthly income would need to be verified. And the reason is the underwriting, and for conventional and FHA guidelines, we need to make sure that your down payment's verified. So if you have mattress money, anything like that, it needs to be deposited and kind of sitting in your bank account for 60 days, and we don't want to see those large deposits. So just don't do it. Don't have your credit pulled if you don't need to have your credit pulled, because that could potentially drop the credit score. Right. And don't spend your money that you have saved for your down payment, because you need that, obviously.
Exactly. That's so true. So deals can fall apart if some of those things are done within the process, because you can be a qualified buyer to get those funds denied, and that's like a tough situation.
Yeah.
So.
And I think buyers get nervous when you list all the don'ts, but my main thing is like communication is key.
Right.
Me and you and the buyer is just making sure like, hey, life happens. So these things do happen.
Right.
But just let us know. Don't try to hide it. And so we can try to help it.
Right.
And help you still be able to get approved for your mortgage.
True. Okay, so we talked about the do's and don'ts, right? Now let's talk about how much do the person have to pay out of pocket, like the upfront cost versus like the closing costs that you can think of.
Okay. So I would say, how much do you expect to pay? I would say first and foremost, when purchasing a house, like your upfront cost would be your earnest money deposit, which is obviously part of the purchase contract, which is then applied towards the down payment. You have to pay for your inspection out of pocket. You have to pay for the appraisal. And then obviously at the time of closing, you're going to have your down payment plus any closing costs that would need to be paid. And closing costs are broken into a few different factors, which is lender fees, third-party fees for your title work, which is so important to get the right title company, and then escrow, which is taxes and insurance that need to be held in an account so we can make sure that your taxes and insurance are paid for on time.
Right. And so the initial thing, too, that a lot of first-time homebuyers don't really consider is the earnest money deposit, right? So that's typically, depending on the contract and the terms within the contract, it's typically 1 to 3% of the purchase price of the house. And that's typically is due 2 days after your pre-approval is submitted. I mean, after the contract is actually submitted to, the seller, and they accept it. So. Yeah.
And you don't need the down payment. I get this question a lot, is you don't need that full down payment until the day of closing.
Right. But you want to make sure it's in your account.
Yes.
Because during that process, the documents go to underwriting, right?
Correct.
So that's why everything needs to be like in order.
And that's why we make sure we do a good job with the pre-approval.
Exactly. So a lot of people don't know this. What's the difference between like a broker and just a lender?
Oh, great question. I worked for a large lender for a long time. They have they still have really good programs. I think the main difference, two main differences, is a lender, you're using their programs. So there's really only a select amount of programs that they have available to you.
Right.
As a mortgage broker, I'm really out there advocating for my client, trying to figure out what the best loan option is for them. I'm not tied down to one lender.
Right.
I can work with multiple lenders. I think we are signed up underneath 50 lenders.
Wow.
And a lot of times there's only, really a main 10 that you're looking at because you're just trying to shop interest rate. You can actually shop PMI. PMI is different from lender to lender, and closing cost. And it's really important to be able to work with all these different lenders because everyone has different programs. So our self-employed clients may need, a totally different lender than my W-2 clients.
Yeah.
So I think that is obviously the main difference. And I personally feel like the other main difference is service, just because you can give your clients such better service. I personally feel like as a broker, because you're not dealing with the influx that you may potentially be dealing with at a larger lender.
That's
and it's more
true.
One-on-one. I personally make sure I'm with my file all the way from application to closing. If you call me at any point, I know what's going on. It doesn't change hands.
And that's so important because when I am acting as a listing agent, and like you said, when you have to call to make sure the person actually is qualified, you want to speak to the lender before you accept an offer, right? And sometimes when I call and I try to verify to make sure
Like
the pre-approval is still good,
it's hard to get a hold of.
I have to go through this person and this person when I want a direct point of contact.
Exactly.
So it's so much easier, and that's what I do like about working with you is that if my clients have questions about the financing part of things, I said, listen, whatever you and Kelly discuss, you'll have to reach out to her. She'll get back at you at a timely manner. So just reach out because it doesn't matter. Like, honestly, it's been times where you work deals for me at 10 o'clock at night, and I appreciate that. And
I always make sure I answer the phone.
And I didn't realize that you work with over 50 different.
Yeah, we have tons of different lenders.
I didn't know that.
Through.
I thought it was only like 20, and that's what I've been. So now I can say that.
Yeah.
When I'm pitching you to other people. Yeah. Okay, so what do you expect the market is going? Like, where is the market going from here? Like, interest rates are fluctuating.
Yes. I think that's the $1 million question. I don't have that crystal ball in front of me. I think a lot is up in the air right now. Hopefully we steady out and we see some sort of decrease over the next year or so, but I don't tend to focus too much on interest rates. With all the experience I've had over the past, I've seen interest rates everywhere. So if I have a client that says, I don't want to buy because the interest rates are too high, I just kind of say to them, like, is this the right time for you to buy?
Right.
Because that's what matters. Because everyone says, I want interest rates to go down. Well, what happens when interest rates go down? We're going to have so many more buyers out into this market. And do you have the extra money to do an appraisal guarantee? Do you have more money to offer more? When the market is up and, hot again? No. So why don't you take the higher interest rate if you're comfortable with the payment and refinance it?
Yeah.
When that time comes.
Yeah, that's true. Because honestly, even though interest rates are higher than what they were in the last couple years, I'm still seeing people bid over asking price for houses, still multiple offer situations. So the longer you wait, it's just like I said earlier, you can miss an opportunity.
Exactly.
And so that's a great point that you just brought up. Like, you really have to marry the house and date the rate, right?
Exactly, yeah.
So that's what a lot of people say.
Yeah. Marry the house, date the rate. You want to make sure.
Wait, date the house, marry the rate.
Marry the house, date the rate.
Yes.
Yeah, marry the house, date the rate. With that, I always tell my clients, though, you have to be comfortable, obviously, with the monthly payment now. And so that means it's a good time for you if the payment's comfortable. Make sure you keep your finances in order, and then we'll always refinance you down the road.
Yeah. It's just that simple.
It is.
It's that simple.
It is. So don't wait.
Don't wait. If you're in a situation or you feel like you're comfortable and you can afford it, buy a house. Because a lot of times people are paying, $1,600 for rent?
I mean, even more than that now. I've seen people paying $1,700, $1,800. And the rental prices, and that's not a lot of things, that's not, something a lot of people have been talking about, is how much are we actually paying for rent?
Right.
And rent is just increasing
They need to put some type of regulations on that or something. Like,
I know.
It's insane.
Should. But it's going to continue to increase, I think, especially with inflation. And over the years, rent is just going to increase. And when you purchase a house, there is a fixed portion of that payment, which is your principal and interest payment.
Right.
The only other two things that can fluctuate are property taxes and homeowners insurance. So when you purchase that house, you should have a good idea of what that payment's going to be over the next 30 years.
That's true. Wow.
Lock it in now.
All right. Well, do you have any questions? I think this was very informative. Anything else you can think of when you talk to a first-time home buyer, like, or some concerns that they may have?
I think also something that I touch on a lot with my first-time home buyers is everyone is so focused on what is my number? Like, what is my pre-approval amount?
Oh, yeah.
Well, that does matter a lot, but what also matters is your budget, right? Because you can get approved for $350,000, but can you afford a $350,000 monthly payment? So you need to make sure that as you have your pre-approval and as you're working with an awesome real estate agent, that you're also touching base still with your mortgage broker to make sure that you can afford that monthly payment. Because there's no reason to be looking at houses that are out of your budget amount, because you're just going to be wasting your time and you're going to be thinking, oh man, I'm so disappointed because I love this house, but I don't like the payment, so I'm not going to make an offer on it.
And that's a great point. So deals do fall through, like, at the closing table, because when they see that final payment, like that, how much the monthly payment will be, they get sticker shock. So that's why when I send you clients, I always say, like, make sure talking points, right?
Yeah.
Probe, ask as many questions as possible, but you want to make sure that you ask, like, the price doesn't matter.
Yeah.
Stick to what you can afford monthly.
Yes. And so I tell all my clients, like, when you're out with your realtor, text me the address. Before you submit an offer, text me the address. Let's look at that monthly payment.
Right.
Make sure you're comfortable with it. And I think that's so important. And I think that's why I'm also so successful, is because I take the extra steps along the way to make sure that they're comfortable.
That's true. Alrighty, well.
This was great, yeah.
This was really good. All right, so now you guys can see why Kelly is a multi-producing broker. She's awesome. She's really dedicated to each client she works with. And once you work with her, it's like your family, right?
It really is, yeah.
Like, our clients, they invite us to dinners and stuff.
I know, yeah. All my clients have my cell phone number.
So that's it for this video. I hope you guys learned something. I hope you enjoyed this. And if you, please do me a favor. If you learned something, leave a comment of what you learned. And then also hit the notification bell, and subscribe to my YouTube channel. If you will like Kelly information, it'll be in description. And then also, if you like to reach out to me directly, it'll be in description as well. Hope to see you in my next video.
Awesome.